If you have a solo 401k and you're a Schedule C filer, you might actually be making the contribution incorrectly. If you're taking the net earnings from self-employment and multiplying it by 20%, the math that you get from that might actually be the wrong amount that you can contribute into your solo 401k, and you might be over contributing. So I'm going to show you in this video exactly what I'm talking about so you don't make that mistake. What's going on, guys? Welcome back to the channel, or if this is your first time at our channel, welcome to the channel. My name is Travis Sickle. So I'm going to go through an example to show you exactly what I'm talking about, because if you're taking line 31, subtracting 1/2 of your self-employment tax, that is your net earnings from self-employment, which you could multiply it by 20%, but there is a difference and a step that you need to be aware of. So let's start with an example of exactly what you're going to go through, and I'm going to pull it up right on the screen here. So here's probably the math that you're looking at with line 31, and in this example, we'll use $100,000. And the 1/2 of self-employment would be $7,065. Your net earnings is $92,935. And then you're multiplying it by 20% to get $18,587. Now, you can also do the additional $19,500, which would bring you to $38,087. And that is correct. So if we go through the worksheet, and I'll bring it up on the screen here to show you that exact same math, with $100,000, we went through the whole worksheet and we got $38,087. But the thing that you want to point out here, or that I want to point out here, is step 12, which seems to be basically irrelevant in most of the calculations, where you're taking this number, entering 1/2 of step 11. Now, what this really breaks down to is the difference between the $19,500 maximum employee contribution that you can make and the amount of your net earnings. So let's go ahead and pull up an example that you can see a little bit clearer, and I'll show you exactly what I am talking about. So if we take our net earnings from self-employment and we look at line 31 for somebody that's now earning $30,000, the answer is going to be a little bit different. So 1/2 of our self-employment would be $2,119.50, where our net earnings from self-employment would be $27,880.50. We're going to multiply that by 20%, which would give us $5,576.10. And then we're going to add the $19,500 to give us a total of $25,076.10, but that would be wrong. Well, why is that? Why would this be wrong? Because we have to go back to that step. So let's go ahead and pull this up. And if we look at that step, here's what the math is going to show us. It's going to show us that our net earnings from self-employment was $27,880.50. And let's go ahead and pull that right back up so you can see it. So $30,000 minus 1/2 of our self-employment is $27,880.50. Now, if we go to this section, we're in step 12. I'm just going to go ahead and basically redraw it for you so you can see it clearly. We take our $27,880.50, we subtract our $19,500, so it's the difference between our $19,500 and our $27,880.50. That gives us $8,380.50. Now we have to divide that by 2, which gives us $4,190.25. This is basically a cap. And that's what's going on right here on step 12, where we're taking the 1/2 of that number. And that is going to be the cap, where if I showed you the math from previously, that we multiply it out to $5,576.10. But because our income was too low, or our net earnings were too low, we can't make that maximum contribution without taking into account this cap. So that means that our total contribution gets reduced. Now we can still put in the $19,500, but the employer deduction is only $4,190.25 and not the $5,576.10. So it's really important that we get that right, because now our max contribution or deductible contribution is $23,690.25. Now you might be wondering, where is this? This is on publication. I believe it's publication 560, and I'll go ahead and leave a link in the description at the bottom. Now I've gone through this math several times in previous videos, but if you're below a certain income, and it depends on which year you're doing this calculation, so it's not going to be the same, I don't believe, for every single year. But if you're in that, what you can call it kind of like a donut hole, if you will, where it's going to have a cap to it, and you're going to have to put in a reduced amount. So it's really important that you go through this full worksheet to make sure that your calculation is correct, because it's not just the 19.5 plus the 20% of your net earnings from self-employment. So I hope this clarification has helped avoid you make a simple mistake, and hopefully you're getting the right amount of those contributions into your solo 401k. And if you have any questions on this, let me know in the comments down below. And if you've enjoyed this video, be sure to subscribe and leave your comments down at the bottom.